everyone, and thank you for joining. I hope everybody's enjoying the Thursday, getting through the week well. I want to welcome you to our Thursday afternoon webinar. Many of you have likely been joining our weekly webinars that occur on Tuesday afternoons, where we get policy updates from authorizers and field questions. In addition to those policy and regulation topics, we've been asked to provide content and resources that are responsive to the current environment. Last Thursday, for all of you who attended, we hosted a governance-specific webinar, and today we're going to do a deep dive into some budgeting considerations that are important given the decrease in core aid and certainly the future economic uncertainty. So we're happy to have here with us today some partners who are going to provide a great presentation. Following their presentations, we will field questions in the Q&A feature, and you'll be able to see at the bottom of our screen, as with prior webinars, we'll record this information and make the recording and materials available on our website. Just want to say that again. If you want, we'll field questions that are in the Q&A feature, which you can see at the bottom of your screen. So now I want to welcome and introduce our panelists for today. First, we will hear from Barb Achenauer, Managing Director for Finance and Operations at SUNY Charter Schools Institute, and Valerie Martin-Kowalski, Grant Administrator at the NYSED Charter Schools team. Then Raj Tucker, Founder and CEO of Charter School Business Management, will present some additional guidance and recommendations. We also have here, of course, many of you will be familiar with, David Frank and Susie Corello are here with us, and they'll help field questions at the end. So right now, I will turn it over to Barb. Thank you.
Hi, thank you, and good afternoon, everyone, and thank you for your time today. The SUNY Charter Schools Institute is steadfast in our resolve and commitment to all charter schools of New York State, and so very much want them all to succeed. First and foremost, we want school boards and their leadership teams to remain calm. The strength of New York charters is embedded in the structures and foundations that were established from the very beginning when the charter was first authorized. That is how we know that the charters will weather this storm and come out stronger on the other side. So with that, we have budget season upon us and need to navigate these uncertain times conservatively and with thoughtfulness. As you know, in accordance with your charter agreements and your fiscal year end, each charter's budget must be board approved and submitted by June 30th to their respective authorizer. Budgets need to be found to be reasonable and feasible. The Institute, along with other authorizers, is ready to offer any troubleshooting assistance and available to review draft submissions prior to the charter board vote. The Institute will have our templates and guidance available on our website starting tomorrow. Here at the SUNY Charter Schools Institute, we are led by Susie Miller-Corello, our Executive Director. We have our Executive Deputy Director and General Counsel, Ralph Rossi, and I am Barb Achenauer, Managing Director of Finance and Operations at the Institute. Combined, we have weathered well over 20 years in the charter sector, so we have a full toolbox of belt-tightening techniques. Immediate financial health strategies to consider that the school can be doing right now to anticipate and be prepared for the upcoming year. We want to ensure that any lines of credit that you already have in existence are ready and available for use. Verify with the bank that the signature cards are up to date. It would be terrible to find out that when you want to draw down money, that the treasurer on the signature card had left the board 3 years ago and the signature cards had never been updated. Reach out to any of your current existing banking relationships and establish a new line of credit. For potential timing issues with the revenue coming in the door. Any existing financial loan covenants that the school may have, determine if any of them need adjusting. Talk to your lender and see what the potential is. If it would be helpful to have a conversation with the authorizer and the lenders, be sure to reach out. The options are very school-specific and handled on a case-by-case basis. But the big takeaway is that the school should be communicating their concerns. Conduct a risk assessment. Determine which areas of the school budget are most vulnerable and include mitigation strategies in this 2021 budget. Examples could include revenue timing on philanthropy, your resources availability from your partner organizations that might very well be in a financial situation at this point, any CMO arrangements, and any staffing concerns. Raj, later on in the presentation, Raj will dig deep into this topic and provide you with some good takeaways. Keep in mind that your dissolution reserve funds for each Ed Corp is $75,000, and at the Institute, we have a maximum for a merged Ed Corp of $350,000. Those set-aside funds are not to be used for normal operating purposes. So do not count those dollars in your cash on hand calculation to pay your current obligations. Budget development strategies for the upcoming 2021 fiscal year. The Institute, in addition to our budget template, this year we're going to request a narrative be submitted. And what we want to see in that narrative is the contingency strategies that the Charter Board and leadership are instituting to address the potential financial hardships. And the good thing about this is you have this documentation. It is discussed at the board level. It is documented in the board minutes. You have that to reflect back on as you're going through the year, and as you need to make adjustments, you can look back at what your original assumptions were, and then you can revise from there, and you have a good solid record of what the board has done. In many cases, a lot of older charter schools have adequate accumulated reserves. From all those years of operating surpluses, they have their rainy day funds. Well, we're in the rainy day season, so using those surpluses, it's fine. Just document it. You could run the budget for 2021 at a deficit if it clearly says you have a plan to use those accumulated reserves, but put parameters around it. And as board members, you really need to monitor that throughout the year and keep a good eye on it. We're recommending that you budget flat per pupil. You'll see in the Institute template that we have used the basic tuition run the SED put out for 1920. We've built that into our template to use that exact same template for 2021 because as what I know right now is the 2021 template is not available yet. So ours links directly to that. So when you pick your budgeted enrollment, it will draw the per pupil rate from that. We have some other uses within our template where you can navigate where some districts the per pupil is going to be lower and some cases it's going to be higher, but you can make those adjustments elsewhere in the template that I'll talk about. The Institute has built into our template an expense line item titled COVID-19 contingency. And what we're recommending there is that the leadership and the school board come up with a percentage of a set aside. It's percentage of the revenues, set it aside on an expense line item. It's there, it's a backstop, it's a buffer, and you guys decide what you think is reasonable for that line, and it can be adjusted. The Institute, we've always required that you budget chartered enrollment or lower, but we are going to push hard on this year that it really needs to be used that conservative measure, that you budget chartered enrollment or lower. And be aware, at the end of the day, there's a true-up at year end with your sending districts, and you have to reconcile. So you don't want to have to owe back the district money. So just be aware of that. Oversight and monitoring. Charter board members have a fiduciary duty of oversight of the annual budget and allocation of millions of dollars of public funds. So the board has a responsibility of review and approval of the annual budget, which the school leadership then implements. Throughout the year, the board should be providing strong governance by monitoring the status of the actual revenues and expenses throughout the year. So what does strong oversight and monitoring look like? Conservative budgeting, more so now than ever. Conduct a risk assessment analysis and see where your high-risk areas are and identify them. Use mitigation techniques, prioritize and minimize those risks. And Raj will get into some good strategies on this topic. Flat per pupil aid, live within your means this year. Budget to actual analysis requires financial reporting at each board meeting to review and make determinations as to where the budget needs to be adjusted to get through the remainder of the year. And at the Institute, we require quarterly financial submissions. We're gonna say that on those quarterly submissions that you can revise those budgets at each quarter as needed to help the schools navigate throughout the year. Now, the SUNY has a finance team made up of three of us. It's myself, it's John Flack, and Connor LeClaire. And I believe now a lot of you are familiar with us. You bounce things off us a lot of times. You send us your templates. We work with you. But just know that we are always here and we're always ready to review whatever you want us to take a look at. The Institute website contains a resource page. It has a number of resources, including fiscal and governance, as well as COVID-19 specific resources. Here's a snapshot of what our page looks like, and here is our website address. So with that, I'm going to pass it off to Valerie from SED.
Thank you, Barb. Hi, everyone. Barb's information, I feel, is spot on, so I'm not going to waste your time by being repetitive. And I think we're all really here to hear Raj anyway, and Barb. I do want to note that Board of Regents authorized schools are not required to submit updated budgets on a quarterly basis, although we would certainly be happy to review anything that you would like us to, or to submit a narrative, just to clear that up. That applies to SUNY schools. However, if you have questions or concerns about fiscal issues pertaining to your school, don't hesitate to reach out to your liaison in the NYSA Charter School office. And of course, I'm always available. And I really appreciate Barb's suggestion that for Board of Regents authorized schools, certainly feel comfortable. I think it's a great idea to build in a COVID-19 contingency item into your budget, into the expenses, and so that you are, should this drag on as far as, any more than it already has, that you have something built in for that. We also have, as you know, David Frank is our executive director. He's always available as well. His contact information is on the slide, as well as mine. And
although certainly reach out to Val and your liaison first.
And you know who your liaison is and how to contact them. So I didn't want to go to that trouble. And we also have some information and resources that our communications team has built into our website. And as you can see, the links are right up there. And also into the NYSA.gov has its own coronavirus website as well, which has been very helpful. And then with that, I'm going to pass it off to Raj. Thank you.
Great, so I'm just bringing up my screen. All right, thanks so much for having me today. I'm here to share 25 recommendations on responsible financial management and budgeting during these uncertain times. And just a few notes before getting started. I know that this is an unprecedented amount of information overload. So there's a lot of webinar fatigue happening, and I've purposely created very detailed slides due to this information overload. So you can use these slides as a checklist to follow up on recommendations and decision points that resonated for your school and network. Yes, the PDF of the detailed slides and the recording will be made available. And just keep in mind that what I'm sharing are recommendations, and these recommendations are only if they resonate for you, and if you haven't done them already. So if you've done them already, that's wonderful. You're ahead of the game. Your finance team is on it, additionally, we'll be sharing another resource called what we call an impactful one-pager that won't be discussed, that we created a few years ago, and it may help. It's called 50 Ideas to Raise Revenues, Cut Costs, and Save Time. Just a very quick 30 seconds on us. Our vision is one day all charter schools will view and value responsible financial management as vital. Our mission is to empower charter schools with vital knowledge and services to understand and practice responsible financial management. And our core values are kindness, accomplishment, respect, motivation, and appreciation. And you'll see that that spells out karma, because we always do what's right through building trust and being humble in our process. And our why: 1 in 7 charter schools have been shut down, 80% of due to financial mismanagement. This is why I launched CSBM long ago. This is a solvable problem that our 56 teammates have been solving for the past 14 years. And our purpose overall is to eradicate financial mismanagement. So the agenda, we're going to go through the 25 responsible financial management and budgeting recommendations, where 10 of those are to protect your school now. So attempt to implement them as immediately as possible. Another 10 to implement from now through June 30th in Q4 of your fiscal year. And then a final 5 to execute during fiscal year 2021. And then we'll end with some additional Q&A where all the panelists will be involved. Okay, so some of these will be obvious, but if you haven't already, calculate how many months of cash you have on hand. You need to know how much runway exists in the catastrophic event that for some reason money stops flowing in. Establish a credit line, and then contact your bank for instructions on how. They may ask for your 990s and a list of other documents. If you don't have this already, establish the target amount for even how much to ask for. We recommend 5 to 10% of your overall revenues, and another measure could be enough to cover 2 payrolls. So if you do semi-monthly payroll, then that's about 8% of revenues. And then if you already have a credit line amount, increase it if you already have it in place. And even though this could be a small dollar amount, transfer your interest earned from your dissolution account to your operating account, because you're allowed to. And you may have had your dissolution account for several years, and maybe that's amounted to a few $1,000s. But please keep the principal amount that's required by your authorizer in there. The next big question for you now is to decide if you will apply for your Paycheck Protection Program funding. There's 3 essential camps that I'm noticing. Some schools are in the yes camp, saying yes, we need to make up for potential decreases in per pupil funding, or we're going to plan in advance for lower student enrollment than expected. Another camp is people are unsure. They're saying, The organizations that are awarded this PPP funding is subject to FOIL, and this either matters to us, this doesn't matter. Definitely get all the advice and align with your board and your legal counsel. And then there's some schools that say, no, we have plenty of reserves and we feel the organizations who truly need it should have access to it. So decide which of the three camps you're in and then move forward accordingly. And the New York Charter School Association and the National Alliance says that charter schools should consider applying, but again, it's totally up to management and the board. If you have a large enough surplus this fiscal year, you may want to consider purchasing some of your items that you need next year, and if you have a place to ship and receive those items, to free up some of your 2021 budget so that you're not, if it looks like you may run a deficit next year, you can free up some of that. And again, it's essentially just displacement that's going to open up. But for external purposes, there's some schools who always want to demonstrate some sort of surplus year after year, instead of have a huge surplus in one year versus a potential loss in another year. Again, these are all choices for you. If you're in a leased facility, contact your landlord. So there's three measures that we're recommending. You can request rent forgiveness during this mandated stay-at-home measure time period. There's no harm in asking, and I recommend kindly and respectfully, because this is not an entitlement. This is a request that if they're so willing, they can potentially do this. If the landlord doesn't agree to this, then you can offer to tack on time that you've been away from your building to the end of your lease. And if their mortgages are also on hold for the same duration, this should feel fair to them. And there's usually a 1 or 2 page document you can add to the end of the lease to just say, you know, we were out for 3 months, we're gonna be in the building for another 3 months or something like that, you know. And then if neither of those two options work, then you can request a payment plan, because right now cash is king, and having enough cash to survive these times should be fine, but in some cases they're not. So you can offer to divide up the amounts owed across the remainder of the lease. So quick math, if you owe your landlord, say $360,000, and you've got 3 months left on your lease, then you can say, listen, do you mind if we pay you $10,000 additional for the remaining 36 months of your lease to make up for the $360,000 we owe you? And another option you have is ask if renegotiating the terms of the lease is actually possible. And the reason I'm suggesting this is in one of the news items, we heard that WeWork is actually asking landlords for up to 30% reductions on their rent per square footage. So if this is an opportunity for you to renegotiate, you can ask that too. Again, all very kindly and respectfully. If you have lenders, request flexibility on the loan covenants. And we are seeing a lot of humanity and a lot of common sense practices being in place during these extraordinary times. So just get ahead of it. Even if it's for other types of leases that you have, definitely ask the question. Okay, now this is another one with a lot of choices. So there's definitely some security staff, custodial staff, cafeteria staff who only have work when they're in the building, and you have to consider for yourself what feels fair and feasible. So in one case, again, recommendation, if you're applying for the PPP and you expect to receive it, then pay them and make them whole. If we've seen this for certain schools saying, look, the aggregate unemployment benefits are equal to or more than their current pay, then some schools are saying, let's discuss this math and be honest with them and say, look, you'll actually get more with unemployment given the extra dollar amount that's coming from the feds. But if you do go this route, then consider the likelihood of the staff getting these benefits with all the unemployment bureaucracy that may be going on, and absolutely get legal advice around this. We are finance people, we're not lawyers. And then there's something I recently learned about 2 days ago. So if you have part-time work for your full-time staff, you can consider the New York State Shared Work Program. And I'll share an example. So if you have 60% work, so 3 days worth of work for a full-time staffer, unemployment insurance may pay for the remaining 40%. So definitely go to the website. If you Google New York State Shared Work Program and watch the 3 videos that are 3 to 4 minutes each, it gives a high-level view of it, and then again, decide whether to apply for this. What I did learn is if you have your staff on a PEO, professional employment organization, they may not allow this shared work program to happen. So that's from conversation with other fellow entrepreneurs. And then for consultants and vendors that you feel loyal to, 1099s, long-term service providers, ask if they plan to apply for the PPP funding, and perhaps they're solving their own challenges. So on a panel that I was on the other day, there were different arrangements that schools were having. So again, these are all choices for you to consider and figure out what feels right for your school. Okay, so now I'm going to shift into what can happen this quarter through end of June. And so it's going to be 5 on the revenue side and then 5 on the expense side. Overall, just anchor your budget around 1 to 2 non-negotiables. We're always about what are your non-negotiables, and whenever there's a school that has everything is a non-negotiable, then guess what? You're going to have a budget that doesn't balance. So you want to anchor it and then do many iterations until you find something that can actually balance and honor the program that your school would like to offer the students and staff. Develop at least 2 budget versions, one with the enrollment as per your charter, just like Barb was saying, and then another with your chartered enrollment less your historical student attrition rate. So if on average you were down 10% and you were at 500 students and you average around 450, you may want to do 450. You may want to do even less than that and say, we're going to account for another 5% and think it's going to be 15%. So, just do the different iterations. And if you end up with more revenues than expected, then that's good news. And it's always better to operate from that perspective with being conservative on revenues and aggressive with expenses, and ideally creating surplus that way. And if you plan to increase enrollment, it's kind of difficult to do so now. So, maximizing headcount may be challenging, so definitely reach out to the New York Charter School Association who can help with this. A third recommendation with revenues is to check for unused ESSA funding from prior fiscal years and attempt to incorporate those dollars into your fiscal year 2021. We've seen some schools, year after year not being able to utilize those funds. Perhaps you'll be able to utilize them next fiscal year. Okay, if you're in a private facility and if schools are allowed back into building school soon, in the next month or 2 or 3, consider a change in your meal vendor if you're not generating a surplus from your food service. So if your school has a high free and reduced lunch population and you serve your own food, then you should be expecting to generate a surplus on the food service, because the rate that you get per meal should exceed what it's costing you to do so. If you're managing your inventory well, if you're staffing it appropriately, but we've seen some schools on average say that they could generate $50,000 to $100,000 in excess for 1,000 student schools. So again, that's on average, but it all depends on the population. Again, you can contact New York Charter School Association for additional guidance. And then just like Barb said earlier, don't overbill your district for your general education, special education students to create a liability to pay back in the future. This is not a legitimate way to create cash flow for yourself, and it negatively impacts charter relationships with districts, and it makes everybody's jobs a whole lot more difficult. So refrain from doing that, please. Shifting to the operating and capital expenses. So again, this is our view, create as much stability and humanity as is feasible. And what do I mean by that? Staff members are fearing losing their jobs, so try to protect as many jobs as possible. And again, in our view, avoid salary reductions. Most US workers cannot survive a $500 emergency expense. So just really try to keep as many jobs as possible and avoid salary reductions if you can. Consider freezing all of your salaries for 1920 to be the same for the fiscal year 2021. And watch what happens with the per pupil. If the per pupil funding is not cut further by Governor Cuomo in case of an emergency and the school is made whole, then you can make everyone on your team whole by giving a thank you for staying bonus at the end of the fiscal year. But that's only if per pupil funding is not cut. And if it is cut, be transparent about it. So perhaps you had other costs that you were able to manage and you were able to give a 1% bonus or a 2% bonus or a 3% bonus of salary because you were smart with your dollars. Just be transparent about this with your team and just, protect as many jobs as possible. And as always, absolutely, if you prefer to cut positions and salaries, that's your right. Just be prepared for potentially low morale and unexpected departures because loyalty is a two-way street. And if you had promised raises to your staff members due to the increase in UFT scale, for example, and you'd like to honor this, absolutely do this too, and then anchor your budget around this non-negotiable, and then make sure the rest of your budget can fit in. So again, these are all the different choices with a bit of my opinion sprinkled in. Review your budget versus actuals now to determine what's truly needed for your next fiscal year and distinguish between needs and wants. Mysteriously, at a lot of schools, everything is a need and nothing is a want. And it's just like, no. There's certainly some fixed expenses here, and there are some variable expenses, and you can be smart about how you manage all of those. If you have cash reserves, like Barb said, now may be the time to dip into them. So work with your board to discuss what percentage you're okay with. When you arrive at that, have a vote on it at a board meeting and document it in your board meeting minutes. So for example, if you have $3 million in a rainy day fund, decide if you're comfortable with utilizing 5%, 10%, 15% of it during this crisis. And that's only if you absolutely cannot create a balanced budget without this. Do your best to do it, to balance your budget without dipping in. But if you absolutely need to, then you can. But just disclose this to your authorizer and include it in the narrative that Barb was asking for. Then next recommendation is to meticulously manage your existing supplies and assets, postpone any scheduled replacement of furniture and equipment until absolutely necessary. So if every year, every 3 years, for example, you rotate out X number of laptops because they're getting old, and if they're still working, then use them. If they're with your IT team constantly, then yes, absolutely switch it out, but just be mindful of that. We do see some schools, they keep ordering more and more items that they have plenty of, but they just never bother to check the supply closet. Before buying anything new, reach out to other charters through New York Charter School Association to see if they may have excess items to share. There are some times when people are buying new furniture, or they're repurposing their office spaces, and they say, you know what, I have 10 desks and 15 chairs to give away. If someone can pick them up, they're theirs for free, so there could be those type of coordinated efforts that go on. And then consider implementing software like bill.com that automates bill pay. It increases your efficiency by reducing the paperwork and the need to chase down board members for the second signatures. We've implemented this with, I'd say, about a third of our clients thus far, and it saves so much time and energy and makes everything so much easier. Now I'm going to shift into quick 5 recommendations to execute in fiscal year 2021. After your board discusses at length and votes on the approved budget, still prepare budget scenarios of not returning to your facility by June 30th, by September 30th, by December 31st. And here's my thinking on this. This is the first pandemic that we are experiencing in this generation. We don't know how long or short the stay-at-home measures will last. And we also don't know if and how many resurgences may occur. So I don't want to think this way. I'd love to be out of my home, and as we all would like, but let's just be smart about this and just do a couple of scenarios just in case we're home longer than we want. And then also document your lessons learned to avoid any kind of wheel reinvention if and when we have to do this again in the future. Implement or amplify your staff culture efforts. This is especially important. So what we're seeing on our team, we have some teammates who are home alone, and that's very isolating, and that's very tough for different folks for different reasons. And then there's others who are parents of young, school-age children, and they're trying to not only continue working, but they're also trying to educate their students and follow all the instructions from their schools, and it's really, really challenging. So take a second look at your core values that apply to staff if they happen to be different from your core values as they apply to your students. And then, for example, there's a fellow entrepreneur whose company is called Successful Culture International, and they created this GRACE model that they're offering free PD on, which stands for grit, resiliency, adaptability, connection, and empathy. Just a few more, and then I'll be done. We go to Q&A. Consider your potential restrictions on the PPP money, and what do I mean by this? Will the PPP money count towards your single audit and potentially increase your audit fees to do that? It's unclear if this counts towards the current $750,000 threshold for the single audit, which previously was called A133. And that threshold is changing to $1 million on July 1st, 2021. So will they treat it similar to CSP and ESSA funding, or won't it? And it's treated similar to E-rate money, where E-rate isn't counted towards that federal maximum. So, and then the other question is, if PPP money is restricted towards salaries, then will that prevent you from using it towards the ESSA salaries? So will that open up more dollars? And then, because we don't want you to double dip, causing you to either return the PPP money or have to write it, worst case, you write an amendment for ESSA funds and use it for the future fiscal year. But this is something that came up on the panel that I was part of on Tuesday. If you don't already, please forecast through fiscal year end on both an accrual basis and a cash basis. That's just a really smart practice and a discipline to do each month, and if not, each quarter at least. And then the last step is to review the impactful one-pager that we call the 50 ideas to raise revenues, cut costs, and save time. And then implement ideas that resonate from that. So we're about to go into questions. That's my contact information if you'd like any more information. And I'm gonna just quickly show you, if I can pull it up. Yeah, here it is. This is what the one pager looks like. So it looks like there's 16 ideas to raise revenues, about 16, 17 ideas to cut costs, and about 16, 17 ideas to save time. So I'm going to turn it over to Anna now to go through some of the questions.
Thanks so much, Raj. And again, folks, we will be posting a recording of this webinar, Barb and Valerie's deck, as well as Raj's deck and the one pager that he just referenced following the webinar. So I'm going to caveat a bunch of my questions as being entirely unfair and direct them towards a combination of this first one, Raj, Barb, Valerie, David, and Susie, around PPP. And so a bunch of questions came through the Q&A, and I think that this is top of mind for everyone. Folks will notice in the chat, I shared a link to the FAQ that the association has created that includes our most recent understanding and our organizational perspective. So the big caveat I'd give before I ask these questions is that I think there is a lot of conflicting information out there, and a lot of folks who are claiming to be experts giving that conflicting information. So your best understanding right now around PPP eligibility, in particular charter schools and the question of their governmental status, and the conditions around forgiveness. And I will welcome anyone who feels like they have a handle on it to share their perspective. Again, with the caveat that no one here is administering that program. It is hugely complex with a lot of conflicting information. Raj, do you have some familiarity there you're willing to share?
Sure. So I've been on it feels like a million different webinars that are describing the PPP funding. And again, this is information that they've shared that I'm passing on to you. I don't claim to be an expert on this either. We are watching it ourselves. But as 501c3 organizations, both the charter schools and the CMOs are, to my knowledge, are able to apply if they're comfortable. And I'm just looking at my notes that I took right before this at 1:30. I was on another webinar that was talking about the aftermath once the funding happens. So essentially, they're saying that it's a pretty, for the banks that have the information out there. Citibank, for example, just made their portal available this morning, so we've been anxiously awaiting for them. You put in some basic information, and then you're placed into a queue until they contact you for further information. As far as there's a list of documents they have the right to ask for. They may ask for payroll registers and the payroll tax filings to prove it once you actually do get the funding, because basically once you get the funding and you spend it through from now through end of June, the bank has 60 days to review documentation and forgive the loan. So if you spend 75% of the dollars that you've been given towards payroll, and there's a cap on the any employees making 6 figures, there was conflicting information given about that. Our understanding is you can cap anybody who's above $100,000 at $100,000 and still add money for health insurance, dental insurance, but not FICA costs, not Social Security and Medicare. They made that clear according to the webinar I was just on. They may ask for lease agreements. They may ask for invoices for your rent. They may ask for canceled checks and payment receipts. They may ask for account statements. And for not only for rent, for the utilities, they talked about which items actually counted as utilities. So the webinar that was given at 1:30 was, they said water, gas, electricity, internet, and phones, and that includes landlines and cell phones, can qualify. So I guess, and then this firm that was doing this, they said to create a separate checking account to flow the money through. I think they work with a lot of organizations that may not be so financially savvy perhaps, but they also said that if you do a class code or a job code through your accounting system and you tag all of your expenses and don't necessarily create a whole new checking account, because that to me sounds like a big headache to create a separate checking account and flow that money in and out and then change with your payroll vendor, and a lot of it could upset a lot of different systems. So I think just create a class code or job code and attach PPP to all eligible expenses, and then be prepared to provide both backup of the expense as well as backup for you paying the expense through check, credit card, or EFT, the bank has 60 days and then they forgive. If they don't forgive, then any balances are payable over 2 years, and that's at 1% interest rate. So, and the money that is given, it's not taxable as revenue to the organization as a nonprofit, you know. So it doesn't matter because these are 501c3s. But yeah, I hope that was probably a lot of information, but that was my
Thanks, Raj.
understanding. Yeah.
Yeah, and one thing that we can do is source a similar content-specific resource, either as a webinar or something else for folks who, it sounds like, are grappling with the decision to apply or not apply and what the implications might be. Before we move on to another topic, though, David or Susie, do you all have any perspectives as authorizers on the PPP?
I mean, I think Raj said it well. If a school can certify that the current economic situation uncertainty makes the loan request necessary, which is a prerequisite of the loan, by all means they can apply. But we know of no school that had their per pupil delayed or reduced, and in fact, there's lots of money going out. But if the school feels it's necessary and their board wants to apply and is aware of the myriad of requirements and steps needed to comply with the SBA's loan conditions, they certainly can. But it also might be is it worth it? And I would also just echo Raj's statement before, that a lot of businesses that are facing real economic pressures, such as restaurants and hotels and small businesses, are trying to get this money as well, and other applications might not make might preclude them from getting their money faster. So just be mindful of that.
Great, thanks. So on a related, similar and somewhat related, but not identical topic, in terms of a line of credit. So a question came up about if a school doesn't have a treasurer on their board, and David gave some feedback through the chat about board involvement and approval of a line of credit. So Raj, I would love for you to sort of give a, if you walk out of this webinar and you either want to get a line of credit or you want to change your line of credit, here are the first 3 steps that I would take. And then David and Susie, I would love to hear from both of you, or Barb or Valerie on your teams, about, as an authorizer, here is the evidence or the documentation that I would want to see as an authorizer of this process having gone, proceeded appropriately.
Yeah, so I would contact the bank, because banks have similar requests, but contact them, but just know that they're inundated with all this PPP related work, so they may be slow to respond to getting your credit line either approved or the amount increased, but they'll walk you through that process. So from my recollection, when we had to do it, there were some forms we had to fill out. We had to provide tax returns, and then they asked for some historical financial statements as well, and they specified which dates they wanted, and then they used that information to make their calculation of how much we were eligible for, what the terms are. For me, as a small social enterprise, small business, I had to give personal guarantees. I don't know, please ask whether there's any guarantees that are being made by the board chair or whatnot, but I'm not 100% sure on that, so I don't want to give an answer there, but they'll walk you through their process. But if you have a really solid relationship with a particular banker within the bank that you've been using for several years, talk to them and they will walk you through the process, but they will probably also set expectations accordingly, given the other, the avalanche they're working through right now.
That's great, makes sense. David and Susie, any thoughts, considerations if a school either wants to get or increase a line of credit?
I would just echo my comments from before. Certainly, the school's management team and financial team can pursue getting information, but we would want to make sure that the board is involved in that decision making and that has final sign off.
Barb's requested that too, and I don't know, Barb, if you've got any additional considerations, whether they might be loan covenants or other areas that might be affected by taking on a line of credit.
Yeah, right. It's going to be on a case-by-case basis as far as the school's financials, but also the bank itself, their requirements as to whether they're going to require board sign-off on the signature cards. So it is going to be a case-by-case basis, but the schools need to reach out to both their lenders with facility financing as well as lines of credit.
Super helpful. So another question, mostly for the authorizers, around quarterly updates. So first of all, a question came through: if schools are pursuing PPP and that money comes through soon-ish, but not so soon that it is anticipated by the board-approved budget, but that would be well before a Q1 update, what would folks advise? And then for any updates, whether they're quarterly or extraordinary, like the possibility that I just mentioned, what do authorizers want to see in terms of any acknowledgement of board review or approval?
Well, that would be contained in board minutes. Yes, so we would see their discussion. We may go back and ask for their supporting documentation that, for instance, the finance committee reviewed. But they can reach out to their authorizer on a case-by-case situation.
Susie, did you want to add something?
No, I always defer to Barb when it comes to finances.
David, any thoughts? Great. And then this is, I think, a SUNY specific question, but there was a question about whether or not the 5/1 update deadline still stands.
Barb, did we lose you?
Now, can you repeat that? What was the question?
May 1st, updates, budget updates. You still want them?
May 1st budget updates, I'm not sure.
There was an earlier question that someone asked about whether those were still due, but if that's...
I was curious about that too, but I didn't know if you had...
I misunderstood the question. It sounds like the answer is no, but if your question remains, you should reach out to your authorizer. Then finally, and potentially most complicatedly, question around the expectation of final or official SED per pupil amounts, and how schools should operate in the current environment until those amounts are final. So SED, if you don't mind, if I could start with you, and you could potentially give a little bit of a prediction about when those amounts will be final, and then would love to hear from SUNY and from Raj about what your guidance is to schools in the interim.
Val, do you want to answer that?
Well, I know our state aid staff are working on them. Of course, you know,
Oh, you muted again. Val, you muted yourself again.
Thanks.
No problem.
Have you happened to speak to anyone in state aid?
Yeah, I mean, they usually state aid runs come out in May. I know that they are aware that there's added need during the COVID-19 crisis to get this information sooner, and they're working as fast as they can with limited resources we have at state ed.
And I believe Barb mentioned earlier her suggestion was to budget based on this year. Isn't that right, Barb?
Yes, that's what we built into our template, is the runs from 1920.
And you did that.
Oh, sorry, Susie, go ahead.
I just wanted to actually, this is a good thing to direct to you. So I know when Barb was explaining earlier all of her preparations for this, one of the things she indicated is that once you do get those amounts in, our spreadsheet links directly to what the NYSED numbers end up to be. So even if the planning is using last year's numbers right now, along with that contingency line item that I think Barb and Connor and John, once NYSED gets their numbers in, then it'll automatically update and you'll know where you stand at that time.
Yeah, and there's just one comment about uncertain revenue, and the revenue isn't that uncertain. I mean, we need to get the exact amount, but the enacted budget did put a multiplier on the formula of 0.945 for the 2020-21 school year, and so we can extrapolate what that means. And I do know that the state association actually has a calculator that they have out there, and certainly reach out to Yomika or Anna for that. That's not the official number, but it'll give you a general rough ballpark estimate.
Yeah, thank you, David. I will echo that and say that the SED number is the official number when it comes out. However, the tuition calculator that's available on our website is based on the formula that was promulgated in the state budget and is based on the official numbers that are implied in the formula. So we're very confident that it is something that is within shouting distance for schools to use in terms of the overall scope of their projecting their revenues for next year. And I know some folks are thank you, Susie. Yeah, so I would encourage people to check that out on the website. And if you have specific questions about your sending districts, to please reach out. Folks are also asking about the potential for future decreases. And so I'll just say quickly that the budget language that the charter tuition is based on doesn't anticipate future decreases. However, overall education funding that was written into the budget does. And so what is unclear, and I think no one can really predict, is what any future relationship will be between those two things that is not currently written out in black and white in a budget that was passed just last week. So I think with that, we've answered most of the questions. I recognize that there are probably some that we didn't get to, and in particular around a lot of the confusing and conflicting information that's still out there around PPP. I would encourage folks to reach out to whatever institution they have a relationship with in terms of banking to get clarification on that is specific to their circumstances. But with that, I'll turn it back over to Yomika to wrap us up.
Okay, thank you, Anna. Thank you again to all of our panelists. And thank you for everyone who's attending our webinar today. Just remember, please, that information will be posted on our website, the recording of today's events. Everyone has great resources. SUNY has them on their website. SUNY Charter School Institute has it on their website, SED as well. Raj Tucker has information as well and resources. Please take advantage of all that's available. Thank you again. We'll talk to you Tuesday for our weekly webinar. Be safe. Thank you. Bye-bye.